Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, guys, welcome back to another live stream just in time for our breaking news here. Got PCE numbers. Apologies for the late coming. I was actually on the phone with my mom and totally lost track of time. Anyways, we've got core PCE numbers coming out in just a second here. Let me just pull this up. We are looking at the, let's see, where are we at? What are we looking for? Personal consumption expenditure year over year came in at 2.1%. Core PCE coming in 2.5% compared to analyst expectations of 2.5% as well. Month over month came in as expected. Take a look at the market's reaction here to this. Stock market was down this morning. There was a little bit of tariff trauma. It's nothing new these days, I suppose. But we had a little bit of stuff going on here. Sorry for the, like I said, I'm late to stream. I apologize to everybody who was waiting. Dollar index. Let me just get rid of Forex Factory here. So 2.1% in terms of year over year, and then 2.5% core. Pretty much inline expectations for core and slightly better than expected for PCE year over year. Let's take a look at the dollar index. Like I said, here is the candle. Not a big reaction, but a move lower here in the pre-market session due to some of the Trump news. I believe that there was some drama in terms of the US and China relations, maybe a little bit of a hiccup in the negotiation process there. We'll continue to watch for headlines on that, but you do see in reaction to some of that, here's your 5-minute chart. You can see obviously where the statement was made that specifically, I mean, let me see if I can pull that up. Hold on. Let me see. Canadian GDP also came in better than expected. How's that doing for my CAD Swiss trade? Well, it was doing good for a split second there. So here's what Trump said. China, perhaps not surprisingly to some, has totally violated its agreement with the U.S. on tariffs. So calling into scrutiny the relations there with China so far. The stock market at that same time, around 8:10 a.m., dropped pretty quickly off of that news. And we see the market slightly bouncing back on the, what I would say is slightly cooler than expected inflation numbers when considering both core and headline PCE. Hope everyone's doing okay today. If you are enjoying the stream, make sure to hit the thumbs up button and subscribe. And I have something I'm kind of excited about. Is anybody here a stock trader? Like, does anybody trade stocks, trade options, trade stocks, invest in stocks, interested in stocks? If that's you, can you just type yes in the chat? Because I want to see if anybody in the room is a stock person. I'm talking about like Tesla and Nvidia and Amazon and learning about these companies and trading them or watching them, investing in them. The reason I say that is because I am considering the idea of creating a second YouTube channel all about focused on stocks. I have thought about doing this for a long time. But the reason I'm thinking I officially will do, like, I've tried to mix it into my own YouTube channel. But here's the reality about it is most people who watch my channel are more interested at the index level. They watch gold, they watch NASDAQ, they watch Forex. That's kind of what my channel is focused on. But I personally love trading stocks, investing in stocks. I do options trades all the time. And I'm thinking it might be time that I make a second YouTube channel all about stocks. So I think I'll probably call it something super creative like Trader Nick dash stocks. But I think I'm going to do that. I've been thinking about doing it for a while. It's just I have so much content that I film on a weekly basis. Like the amount of hours that I spend in front of a camera, you would think I'm the most conceited high school girl you ever saw. But I spend so much time filming and I don't do the editing. We have a great team of people that are much more talented at post content production. But I do think I'm going to probably dip my feet into creating a second channel centered around stocks because I have tools that I trade and use that are stock related. I have, a trading strategy all around stocks and options. Lee says he wants to include options. I've got options too. So yeah, I'm thinking about doing that. Look at this. Russell's top of the list. Love to see that. I'm currently long the Russell, although it's been a messy week so far in terms of price action for the Russell. If we take a look at the daily chart, you can see we had this really explosive move on Thursday. Like Thursday night, boom, up went the Russell. And then we just did not close with any decisiveness there. So we kind of just went back into this consolidation phase. So in terms of the Russell, I'm looking for, if this comes back to my entry point, I'm fine with that. What I'd not be fine with in terms of where I would need to close the trade would be if we broke support here. So I'm watching the Russell pretty close. I do like it to the upside. I think it has more to go. I think the Russell catch-up trade could be underway, but there is this kind of downward structure that we need to break out of, right? So I'm watching this really close. I think that this will break out. So yes, you have some rejection along this resistance point and this downward trend line, but I'm looking to see if we can get kind of this kind of motion going for the Russell. So we'll see. That'd be awesome, Nick. Okay, cool. Yeah, I mean, you guys, that's really nice to hear that there's an audience of you guys that like stocks. The reason I don't want to do it on this YouTube channel is because when I do stock related content on this YouTube channel, there are people who are interested in it, but the majority of people who watch my content are not interested in it, right? Most people who watch this content are interested in, what's happening with the NASDAQ at the highest level, stock market stuff, the US dollar, people who are, and I love those topics too. I'm not going to stop any of that, but I'm thinking I'll maybe make a second channel just dedicated to my thoughts on stocks that I like to trade and invest in. So keep an eye out for that. We do have also, today is our last day that we're doing the giveaway for our VIP membership. In fact, let me drop the link in case you have not joined. In the live stream chat right now, we'll drop the link to the free Telegram channel. So we're giving away a membership this week. So if you haven't already joined, take a second really quick. Step 1, join our Telegram channel. The link for this has just been dropped in the chat. So click this, join the free Telegram, and step 2, throw your name in the hat right here. We are going to be announcing a winner of the Gold VIP membership today. So you might be the lucky winner. If you throw your name in last second, who knows? You might get lucky. You might get a free membership with us, and you come trade alongside with myself, Ivan, and Alan inside of the VIP group. It's a great spot to come hang out and learn something new each day. So gold, in terms of where this thing is going, I'm still pretty neutral on gold. I don't have a strong bias one way or the other. You can see we have a +3 score on gold, which falls in the neutral category, suggesting that things are mixed, right? You're getting some economic data that is positive, which is a negative, the catalyst for gold, right? Stronger economy, weaker for gold, and vice versa. So with gold sitting at 3,300, we have resistance overhead, we have support below. I'm kind of just mixed to neutral on this one. So for price action wise, I think you need to probably see like a decisive break above or a decisive break below these levels in order to really get going with that. In terms of indices, however, I am way more biased. So like with indices, I'm getting a really confirming strong signal to stay bullish, and have been getting those readings since like mid-April. And I've been showing this recently I know that sounds too good to be true, and it kind of is. So I'll show you the full context because if we're just going off of just Edge Finder score, which is not what I base all my trades on, like just because we get a score does not mean I just go long or short. But it is a factor in my analysis. So what we can see here is that there was a bullish score over here, but then we went neutral. Then the next time we got a bullish reading was mid-March. Then we went back into neutral. Then we got a reading around here, which is obviously a little bit weaker of a reading. We just kind of went sideways to down. But then the really interesting signal where we fully got a very strong bullish signal was right around here. And we've been mostly seeing a confirmed bullish trend in the NASDAQ. And this is the same thing for the S&P, for the Russell, for the Dow Jones. We've been getting some really positive signals for a while now on the Edge Finder's score indicator. Now, how do I use the Edge Finder score? That's a question that we get all the time because some people wonder, does the Edge Finder basically tell you when to buy and sell particular markets? And the answer to that is no, it does not by itself tell you to buy or sell anything. It's not a financial advice. It's not an automated, plug in your money and make $1 million. That's not what the Edge Finder is, nor is it ever advertised to be that way. The Edge Finder is basically an advanced scanner for market participants who want to track all sorts of economic data, market sentiment data, and much more. So like, for example, if I want to study economic data, I could pull up the US economic heat map and I can look at all the data points that matter significantly to the trends in the market, right? So GDP growth, the growth of the economy, PMIs, retail sales, inflation statistics. These things matter tremendously to the economy and to the Federal Reserve, who decides monetary policy. So these things matter quite substantially. And so when we're looking at these data points, we want to see the impact that they might have on a currency or on the underlying stock market that we're talking about. So it's a screening software, right? So it doesn't do all the work for you. It doesn't tell you to buy here and sell here. That's not what we advertise it to be. It's a market screening tool. How do I actually use it within my trading then? Well, what I do is I look for strong confirming signals. Like right now, I'm long the Russell because the Edge Finder has a really bullish reading and I liked the technical setup and it met my criteria for an entry on my trading strategy. So I'm long the Russell as of, Friday of last week. So Friday, the 23rd of May, I went long. And when that occurred, put a stop loss. Actually, my stop loss initially was here. I trimmed my stop loss the other day. And again, it met my criteria for an entry. We have momentum to the upside. I think that the risk to reward here looks good. Yes, we have resistance overhead, but I think buyers are strong in this area and we are most likely to continue the momentum that we've recently been on. Kenzo was supposed to be on. I got a message from Chandler just a moment ago. Kenzo says Kenzo can't make it. Might have to go up to Forex James. Totally fine. We had a late start today, so I'm going to stick on the stream for a little bit longer. Let me show you guys something cool too. If you guys go to a1trading.com, if you're a regular stream fan, what you can do here is you can go to a1trading.com, click on A1 live stream. And if you have like a particular guest that you really like watching, you can come here and then basically you can scan the upcoming guests. So technically Kenzo was supposed to come on today, but unfortunately he had to cancel. I guess he can't come on today. So after Kenzo, we have Forex James at 9:15. We have Chris at 10:15. And I believe, can somebody confirm for me? I don't know if Google, I think Google's really smart. So I'm going to assume that this is the case, but can someone confirm for me, does this convert to your local time zone? Like I'm in Eastern time, the New York time. So it converts automatically for me this time. Can somebody check and let me know if this is converted by default to your local time where you are watching from? I'm just curious. I think that's how that would work. OT says it's automatic for me. I think you're responding to what I said, which is awesome. If that is the case, that's really cool. So I mentioned this earlier, but for people who are just joining in, if you're a stock market person, I am thinking that I am going to officially start a second YouTube channel specifically for stocks and options, and I'm really pumped for that. My content load each week is horrendous. So my plan is probably to just do like one video a week, maybe like how I do my Sunday setups on this channel. Maybe I'll do something for stocks. I haven't decided yet. Mine is not synced. Okay. Not for me in Portugal. Dang. Maybe it doesn't. Not a good idea to start a new channel, in my opinion. I appreciate the sentiment. But I've actually spoken with a lot of I've asked the question on a couple different YouTube growth strategy channel things. And they recommended that if your content that you are planning on making does not resonate with the majority of your audience, to move it to a dedicated channel, to niche down and specify what your channel offers. Like on this channel, the majority of my viewers, I can tell you because I've posted stock market videos, they significantly underperform. My channel significantly does much better if I'm talking about indices, gold, Forex. The channel tends to respond very positively to that. But if I'm talking about, Apple shares and why I think they could go up or down, much less interest. And so I'd like to make a second channel where I dedicate that full channel's context to everything stocks. So I don't know. Cedric says maybe stock channel will get more views. I don't know. I just think that it's a topic that I'm passionate about too. I do a lot of stock and trading and investing. But I don't talk about it very much on here because, again, I can see it in the analytics. People respond negatively to stocks on this channel. And that's not because they don't like stocks per se. It's just that they don't care necessarily about stocks. They're trading FX and indices and, CFD products, things like that. So yeah, I am excited about that. I do think I'm going to probably get started on that with my team today, putting together something for that. Anyways, speaking of FX, the beauty of it is I trade a little bit of everything. I'm a complete market junkie. I watch like FX, gold, indices. And when I say junkie, I don't mean I'm just trading, firing from the hip all day long. It's just that I analyze a lot of charts and a lot of markets as part of my process. So I'm looking at the euro. If I look at my FX side of things, let me see if I have any trades. Also, I am so pumped to get back to some development on the stock box side of things. It's a much less popular, well, not much. There's a lot of people who love stock box, but I don't talk about it very much in my channel, but I use this thing all the time. I love working on this tool with my team. We're building all sorts of stuff. Like, so for example, if I go to NVIDIA, like this is what's coming to the channel. I'll be doing income statement discussions about like stocks and why a company looks strong or weak. Like here's NVIDIA. They just smashed their earnings. They just had a monstrous report. And on a price to earnings basis, the stock looks relatively cheap, in my opinion, relative to its own history. So to me, the stock's a buy. I already own it, but I'd buy it on weakness. So, that stuff is coming to the second channel, and I'm really excited about that. We can digest, we can analyze stocks in more detail and not feel like I need to move past them very quickly. Still waiting for the podcast with Tori. It's coming Saturday. We've got it scheduled. Those things take a long time to edit, but we are, Chandler was a warrior on that edit because it's a huge file. But yes, that's coming to the channel soon. Okay, FX side of things, I just did a quick overview. Let's take a look here. So in terms of scores here, look at pound yen. I think the yen pair's turned back. Let me pull up pound yen for a second. GBP, JPY. Yeah, pound yen pulled back. I think also dollar yen did. Yep, dollar yen's lower today. The New Zealand dollar against the Japanese yen is down. NZD JPY, USD JPY. So all of them are down. I'm interested in adding pound yen to the mix, but I've already got a couple yen pair longs. So currently, this is the basket that I have. UJ, NJ. I am long these currencies, and I am short the Japanese yen. Meanwhile, I'd like to add into the mix pound yen. But why don't I just buy it at this level? Why didn't I buy it here? I'll tell you why. So I'd like to potentially get long pound yen to add to my yen short basket. And specifically, I'd like to wait for this thing to move lower if it's going to before adding to my yen basket. So the reason is because I'm already not heavily long at all. I have very small positions on both of these, but I'm already exposed to the yen in two different currency pairs. I'd like to add a third, but I'd like to do so if the yen becomes what I believe to be more overpriced. So if the Japanese yen strengthens and the pound yen moves lower, then I would add potentially pound yen to the mix of my short yen basket, right? So I already have USD JPY on the long side, NZD JPY long side. I have these two trades already going. But when I say a basket, this is a trick that I've learned from Chris Pulver. So Chris Pulver, when he has a bias, like I've watched him trade specifically the CHF pairs for years now. And what Chris will do is instead of just being like taking a huge trade or just one singular trade on USD CHF, he will pick up, let's say dollar Swiss is moving lower. This is a longer term strategy. This is not like a short term scalp or anything like that. Let's say dollar Swiss is moving down over a 6 month, yes, a 6 month period. And during that 6 month period, let's say Chris Pulver is like, okay, I want to build a long position against the Swiss franc. So a long something, short the Swiss franc. What he'll do, and I've incorporated this into my own dollar cost averaging scale in, scale out approach, is he might add a little bit here, and then he might take a different currency pair and add a little bit lower, and then add another one. And eventually, right, small size, like every single one of these is tiny positions. If he is eventually right, there's never a guarantee, but when there is the potential for him to scale back out of a trade, he will take all of those positions and close them out and take profits. Now, I've done this for years. Some people call this grid trading. Some people accuse it of being martingale, which there is difference between talking about what I'm discussing and martingale. Martingale is just doubling your bet size every time. That's not what I'm talking about here. I'm talking about taking small stabs and scaling into a position over time and over a price range, which takes away the incredible, sensitivity to being right on timing. So for me on the yen, right? So right now I have 2 yen positions open, 1 trade on dollar yen, 1 trade on NZD JPY, and I'm looking to potentially add pound yen to the mix if and only if the yen becomes stronger, right? If it gets what I believe to be more overpriced, then I may look to add in a pound yen long. So if I take a look at our heat maps here for a second, just pull up our economic heat map. So Japanese yen, higher inflation in Japan. Let me see. Did we get some data out of Japan? May 29th, unemployment rate came in as expected for Japan. CPI came in at 3.6%. PPI is at 4%. So these things came in neutral for for the yen relative to forecast. I don't know. Am I missing forecasts for CPI? Is that data just missing? I'm going to check. Not right now, but I'm going to ask the devs to take a look at it. Let's see, forecast, CPI, forecast for JPY. Just going to look into that to make sure I'm not missing something. But yeah, so if I look at the economic surprise meter, for the most part, when we look at, the Japanese yen, we're getting a weakness score there. Take a look at euro, we're getting some weakness there. And if we look at some of the stronger currencies, the New Zealand dollar, the British pound, and the Australian dollar are kind of places that I'm more willing to add at this point than other currencies. So this is kind of top of mind for me to be long pound, short Japanese yen. But I already have a couple yen shorts open, so I'm going to be selective with that trade, specifically waiting for like a pound yen move down to like 190 might be where I'm a little bit more interested. So we'll see. 3.5 forecast. Okay, Jim Master, I'm gonna take that to the devs and just take a look at it. US stock market opens up in about 35 minutes. I mentioned this earlier, but let me just remind everybody one more time. We are doing a giveaway today for the VIP membership. If you are not already in the free Telegram, join it here and make sure you throw your name in the hat for a chance to win a free VIP membership with us. Again, we're announcing a winner today, so it's the last chance to get involved. Jerry Short says, I'm a thumbnail designer, and I will say your videos need better and eye-catchy thumbnails. If you're interested, then tell me now. So, Jerry, I mean this with respect, but I get literally like 50 of these messages per day, and I make my own thumbnails. I also study YouTube. I'm not the greatest YouTuber by any means, and I acknowledge that I'm not perfect, but I've studied average click-through rates, not only across YouTube, but in my niche. And I know that my thumbnail rates, the click-through rates, are higher than average by a good bit. So first of all, I'm offended that you say my thumbnails need work because I make them. But also, if you want to make thumbnails for people, I don't know why that is the strategy, but I'm not even kidding. I get like 10 emails a day, people saying, hey, I can improve your thumbnails. Your thumbnails suck. And I'm like, my thumbnails do not suck. I like them. And they get high click-through rates. So, I don't know what, you don't fix what is not broken, Although I'm not necessarily saying people like my thumbnails. Some people dislike my thumbnails, but my click-through rates speak for themselves. Like at the end of the day, this is an interesting hot topic on my channel. Sometimes people really despise that my thumbnails are very clickable. However, I will stand that they're not clickbait. There's never bait in my thumbnails, right? If you see some crazy, Jerome Powell pointing at something, the video will be about Jerome Powell and something that he said. Now, is it clickable? Yes, because my click-through rate is very high on YouTube, which I've worked really hard to get it up there by creating better, with my thumbnails over time. But there is a difference between clickbait and clickable. Some people don't like the thumbnails because they feel that they're super dramatic. But to be honest, we put a ton of work into every video that goes into my channel. Like every day, it's like multiple hours to produce the videos. And when we put boring thumbnails, the video does terribly. And it's like, imagine if you like painted something for an art gallery and they never even turned the light on your painting, right? That would feel terrible. So yeah, we totally make the thumbnails clickable, but there is a difference between clickable and clickbait. Bait is promising something that doesn't get delivered, and we always deliver what is on the thumbnail. Taking a look at the Russell, down 0.5%. The VIX, back to 19.7. It was up a little bit more this morning. VIX was up a little bit more. Dollar index, take a look at the hourly chart, 4-hour chart. Range bound still. I put out a message yesterday about the US dollar. Like the US dollar, I think that you can get really fancy if you want right now on like which way is the dollar going to go and all this and that. But I think like we could really just keep it really simple and just say, look, the dollar index is in a range and it's trying to figure out which way it wants to go. If we can get some sort of decisive break above or below these extreme levels, then I think we can look at the dollar a little bit differently. But I say that kind of cautiously because a lot of people, they get chopped to pieces trading a market like this, right? Where the dollar's just going back and forth and it's not really decisive at this time. It might be if you're looking at like the 1 hour chart, there might be some trends and things like that. But the difficulty here has been there's like starts and then stops, starts and stops. So I'm looking for, personally, I like to look for what I consider to be the quote unquote easy trade, which is when everything kind of aligns. Like nothing is actually easy in trading, but the simplicity of saying, okay, most of our indications are very strong or very weak is what I look for in trades. So like when I'm talking about the S&P 500 right now, everything on our system is suggesting more bullishness than bearishness. And it has been doing that for the last several weeks. So does that mean that from here, the S&P 500 should go up in the next 1 hour? No, that's where people like mess this up. People look at the edge finder and they're like, oh, it's very bullish, so it has to go up today, right? It's not quite how it works. It's just suggesting that most of our indicators, sentiment, technical, and economic data are suggesting they lean bullish. And so when I look at that and I say, okay, they're suggesting lean bullish, I like the idea when I look at the S&P 500 at looking for constructive longs where the risk to reward makes a lot of sense. So I've got edge finder confirmation, and then I'm looking for like a pullback. Like if I get a pullback into this area here, I already have a long Russell trade, but I love the risk to reward on this trade. Where could I be wrong? Sure. Like I could be wrong in taking a long trade here, but my system here is suggesting that we lean more bullish on our indicators than bearish. And so I'll take that trade. I'll look for that opportunity. So I just wanted to point that out because again, that's a common misconception about any system or signal. People will say the RSI doesn't work because the RSI is wrong sometimes. Like the RSI is a wonderful indicator. It's like the simplest thing in the world, and it can work great when combined with other things. That's why, a lot of times people will bash trading strategies, right? They'll be like, this strategy is silly, or that's a retail system or a strategy. But it's kind of like looking at, you're trying to like hammer something in to the wall with a handsaw, right? You may just be using a tool wrong, but the RSI is super, super useful. Moving averages are super useful if applied to a system and a trader who knows what they're doing with it, right? Don't blame the tool, blame the trader who's not using it in combination with a system that works, right? Now, if you're looking for something where you're like, I just want a simple moving average cross, and when it crosses, I buy, or when it crosses below, I sell, and you just want something so simple that's just going to print money, then if you find something, you let me know. But I've never found anything like that. It's all kind of context. There's a little bit of intuition involved in what I do. It's experience. It's understanding the fundamentals. It's understanding, and then using simple moving average crossovers, right? Or something like that. But again, I think a lot of times you see people blaming the tools like support and resistance doesn't work, or trend lines don't work, or moving averages don't work. And it's very easy to, if you hold something under a microscope, point out when it's wrong and say it just doesn't work, right? But there is no holy grail in trading. Trading is a lot of experience related, right? There's a lot of like doing a repeated action over and over. You get better at learning specific charts and the way they move, right? There is a little bit of nuance to that. We have 700 people watching on a Friday. I hope everybody's doing well, and I hope you have something fun planned for the weekend. And if you don't have something planned for the weekend, I hope that you spend some time back testing and improving your trading system to get ahead for next week. Dow Jones still sitting in a bit of a range here as well. The NVIDIA earnings did help, but right now this market is so fixated on what happens with trade dynamics. We saw this morning that there was a little bit of, it has been a roller coaster in terms of the trying to follow the trade dynamic stuff. And I'll tell you, one thing that has been a great compass in all of this, right? Do you guys remember a couple of weeks ago when everybody thought the world was going to fall apart? We saw it in the market sentiment stuff, right? We saw it in the investor sentiment surveys that were being published. Everybody was so bearish in the surveyed responses. We saw that. We also saw consumer confidence take a hit, right? So let me see if I can find, I need to move that into our market sentiment. Consumer confidence, right, took another hit. In fact, let me just write down a note really quick. CB confidence. This really should be a market sentiment. Okay, I'm going to get that moved over this after stream. Market sentiment, right, was horrible in the last few months. Also, this is missing something, I think. You could still kind of see it. Consumer sentiment was dropping, consumer confidence. We saw it in the put to call ratio, right? The put to call ratio went bananas. People were buying puts like crazy, fearful that we're going to go into an impending recession. And what I want to get to, what I want to show you guys is that the news cycle will scare the heck out of you. If you're reading articles all day, then it's no wonder you have like a scared, pessimistic outlook of the world, because you're reading, you know, in my opinion, almost like the equivalent to just mental poison, right? It's horrible for you to just read headlines for face value and to spend all your time kind of believing that's the sentiment. Now, I look at headlines too, but I use them more of as like a sentiment indicator themselves, right? So if everybody is posting about how, you know, the world's going to go into a massive recession, or on the flip side, everyone's posting that, you know, Palantir is going to go to $300 a share or something like that, those are indicators. So we saw that in our contrarian indicators in the put to call ratio, where everybody got very, very scared and bearish on the market at the worst possible time. I've said this many times on the channel. March 8th, the put to call ratio reached a massive high point. People were paying up huge to buy bearish bets in the forms of puts on March 8th. March 8th is this day right here. This is March 8th. Everyone was getting bearish at quite literally the bottom, right near the bottom. That's where everybody was buying puts like crazy. So everybody who bought puts in that day, everyone who bought puts in that day, unless they scalped them on like the 15-minute chart or something like that, if they held, those puts expired worthless if they were out of the money puts, which is what a lot of people buy, right? They buy out of the money puts to protect their portfolios. And so the reason I'm showing you that is that people were saying, oh my gosh, these tariff things are going to destroy the world. And what I would encourage you to consider, could the tariff stuff actually destroy things? Sure, it could. Sure, it could. It could change trade dynamics and dramatically worsen the situation. But I think the way to approach it personally, this is how I do it. You do what you want to do. I am not going to jump to those conclusions because the future is unknown. There are smart people on both sides of this issue thinking that tariffs will cause persistent and problematic inflation. And there are also smart people who think it'll probably be a one-time price increase, but not a persistent driver of inflation. They're smarter than me, and I acknowledge that they're smarter than me. Many of the very, intelligent people who, know every detail about the economy there is to know, and they can't figure out for sure what tariffs are going to do, if they even get enacted. There's a lot of unknowns here. What can I do as a trader? I can look, admittedly, backwards and look at the hard data that's actually coming in. So what I mean by that, backwards, well, some people are saying, well, the tariffs down the line, they're going to do this. Or other people are saying tariffs down the line, they're going to do that. Or they're not going to put tariffs on, or they are going to put more extreme tariffs on. There's all these speculations, right? I do my best to try and remove speculation from my trading as much as possible. There is a little bit of speculation I do, but I'm not trying to make these huge calls of what's going to happen with tariffs and things like that. That's not where I make my money in markets. Where I make my money in markets has been, let's look at the hard data. What do we have in the hard data? See this? The stock market impact in blue. After looking at all this economic data, the Edge Finder leans bullish on stocks and has been doing so for a while. Okay? Why? Inflation has been cooling. Let's look at what we can actually see and observe right now. Because all this tariff trauma, all these headlines, all these Trump's doing this and Trump's doing that, and what he's doing is going to work, and what he's going to do is going to ruin the economy. There's all that noise going on. Let me just look at the data. The producer price index came in better than expected. Inflation is cooling. Gives the Fed a little bit more wiggle room to work with. GDP growth came in recently, actually yesterday, slightly better than analyst forecasts. Manufacturing PMIs. In May, both services and manufacturing PMIs, these are forward-looking indicators of the economy from key people in the economy, hiring managers, things like that, they were better than expected. So the reason I'm showing you all this is because, again, this is the hard data. And there's a lot of fear around soft data that has not shown up. Earnings season was good for stocks. Inflation data was good for stocks. PMIs were solid. So there's all this fear that the headlines will sell to you. They want you to click their articles and read and subscribe to New York Times or all those things, right? But the hard data has not seriously turned from my point of view here, looking at a lot of it. I do this every single day. Am I the holy grail for economics? No. But most of our indicators, the ones that the Fed quotes very often, which is what we track here on the Edge Finder, they're suggesting that the economy is not in shambles and that things can be okay. Now, could tariffs come out and cause a huge, could something dramatically worsen in the tariff story and freak out the market again? Yes. But I don't know that is going to happen, and I'm not going to try and make a bet as to whether or not that's going to happen here and now. Do you see the difference? I hope that made sense. I hope that what I just explained resonated with somebody. I find a little bit more security and have made a substantial, percentage gain this year trading the hard data rather than freaking out about the soft data. Soft data being surveys saying people are really scared or the consumer feels like they shouldn't be spending money. Those are soft data points. They're not hard data, because there's been many instances historically where people say they're super worried about the economy and that they think things are going really poorly, and then they go buy new cars, like car sales go up dramatically. The consumer's mentality does not always reflect in the hard data. Do you see what I'm saying? I tend to focus more on the hard data, which critics would say, well, that's looking a little bit backwards, isn't it? Yes, but trying to look forward is very difficult and often wrong. Right? So to me, it's like, okay, the US economy seems to be holding up okay. I'm going to lean long. If all of these things start turning red, if we start getting negative sentiment, I'm not going to be buying indices with wide stops, right? So that's a dynamic shift. So I keep an eye on this stuff all the time for that very reason. DAX is up here today. Dollar index still flat on the day. Japanese yen up a little bit. Bitcoin sitting just shy of all-time highs. Dollar yen's down a little bit today. Pound dollar pulling back just a bit. CAD Swiss flat today. It's relatively quiet here today, at least in terms of market movements. We do have gold moving slightly lower. But again, I think this is a really choppy chart right now for gold. You've got this 4-hour downward channel. So we'll see. We'll see where that wants to go. Oh no, guys, it looks like we have we don't expect James to be joining the show either today. Might need to call it early today. So couple things we'll do here. So we unfortunately our two follow-up streams both canceled. I guess they were like, hey, you know what? It's Friday. I'm off early for the weekend. It's all good though. It happens. Both James and Kenzo are not going to make it to the stream. So I'm going to probably call it quits here for the stream today. We will be posting some more chart analysis in our free Telegram channel. If you want more content today, bonus content can be found in our Telegram channel. Like, for example, yesterday we did analysis on GDP numbers, on employment claims. I did a chart markup on gold. We did some bonus footage. We always do like bonus clips. So if you're somebody, if that would be beneficial to you to get those things sent to you and you use Telegram, make sure join our free Telegram channel. I also have some really exciting news. Starting next week, we have Alan going to be sharing his analysis too. You guys may know Alan Perez from the streams. He's going to be helping us out with some written content in our Telegram channel and possibly helping us with some video content as well. Things are leveling up big time here at A1. As always, we have, you know, a really great team behind the scenes that makes all this stuff possible. And I'm really excited to see where our content goes this year. I think we're going to have some serious leveling up in terms of video content that we're going to be doing. I think I mentioned earlier, I'm thinking about doing a secondary YouTube channel specifically around stocks. The A1 Trading YouTube channel, I have some plans for that one to improve. As always, the goal has been, since I initially, started doing this years and years ago, I just want to bring the most value I possibly can to the trading community. And that's not necessarily out of charity. I mean, it is a business, but the way that I found the best way to grow things is just to offer value to people for free. And then if people like your stuff, they end up buying your stuff. So that's been the business model since the beginning. I remain as transparent as I can about that. My goal is for you to always be able to click into my channel or the A1 Trading channel or this new channel I'm thinking about starting and essentially get tons of free value. So unfortunately, no more stream guests today. We are done for the day, unfortunately, just because we had some cancellations, unfortunately. So all good. But we will be back next week with more live streams. I'll have content out later today. And if you're interested in the stock market side of things, maybe we could do one other thing. If you're actually interested in stocks, we'll drop the link to our stock market Telegram channel here as well. So we do have a Telegram channel specifically surrounding stocks, and I'll probably keep people in that channel updated on what I decide to do with a YouTube channel around stocks. But it's something I've wanted to do for a long time. I think I'm going to pull the trigger and do it. It'll be fun. Here it is. If you want to join the Stocks and Options Telegram channel, I really only encourage you to do that if you actually are interested in stocks and options, because otherwise that will just be spammy to you. But if you actually like stocks and options and that's something you'd like to learn more about, I'll keep you guys updated in there. Okay, up next, guys. Well, actually not up next. Sorry. We're going to go ahead and shut down the stream. I'm so used to transitioning to our next host. It's like a psychological slip there. Anyways, thank you guys for hanging out with me. If you enjoyed the stream, hit the thumbs up button. We'll have more content on the channel later on today. Stay tuned for that, and we will see you guys next time. Bye, guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.